Okay, even though this stock went up 13% lately, it is still down almost 30% from its peak. Hello everyone, welcome back to the channel. Today we are going to talk about Airbnb, their earnings, their valuation, and more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. And please let me know in the comment section below what you think about Airbnb and if you're investing in it or not and why. Now, many of you may know that I have been tracking Airbnb stocks since they went public, as I have already posted 3 videos talking about this company, but I do have to say that I'm currently not investing in this stock, and I'll explain why later on the video. Airbnb reported earnings a few days ago, and the first thing that they mentioned was that the travel rebound is upon us and Airbnb is leading the way. We have benefited from adaptability of our business model, and we have focused on driving product innovations to meet the changing needs of our guests, which I think it is very important for them to mention that, because many would think that they are still getting affected, but the truth is that they are already reporting a revenue higher than what it was, that one they had in 2019, which we will check later, but hotels are still down. I don't know what you guys think, but I think this is happening because people now feel more comfortable renting a whole house or a whole apartment instead of a hotel. Because of the whole pandemic, houses are more private and seems to be more comfortable, that you are able to cook, have a family, to watch TV and all that, and in comparison to a hotel room. Also, I think it is important that they mention that they are focusing on driving product innovation, because to be honest, one of the cons about Airbnb is that there is no barrier to enter this market. Anyone could easily come up with a platform just like Airbnb did and be a huge competitor in the future for Airbnb. Yes, Airbnb have a huge brand recognition, but it would not be the first time that this happens. Don't forget about Nokia being huge years ago until Apple and many other companies appeared. First of all, Airbnb reported $83.1 million in nights and experience booked, which, as we can see here, it is up 197% year over year, but it is not fair to compare it with 2020 because Q2 was when lockdown started, but still comparing it with 2019, they're almost at the same levels as Q2 2019. They missed by a little bit, but still beat analysts. Now, we can see that their gross booking value is certainly higher than 2019, as they reported $13.4 billion, all the way up from $9.8 billion in 2019, due to a higher value per night. We are seeing price inflation right here, which is why they have higher gross booking value. The question is, how much room does Airbnb have to continue growing and surpassing these levels? How can they continue exponentially growing night and experiences, and will they be able to continue raising their prices? Because while more and more people join the platform as a host, there will be more and more competition, and hosts will compete with the prices, obviously benefiting us as traveler with cheaper prices, but maybe not that much benefit to Airbnb. They did report a nice revenue growth in comparison to 2019 of 9%, which obviously is not as huge as year over year, but definitely a good sign of rebound for the company surpassing pre-pandemic levels. This is super high margin business without a doubt, which it is obviously very attractive to investors, as they have a gross margin of 77%, which is incredible. And obviously, as their revenue increased, their expenses increased, and they reported a net loss of $68 million, which obviously is a huge improvement year over year, and even in comparison to 2019, which is very important because that is something that we want to see in companies. If their revenue is growing massively, we need to see their net income or net loss improving as well at the same pace or even faster than their revenue. Their balance sheet is nice. They have $5.6 billion in cash and cash equivalents, a good current ratio of 1.48, which we have seen way better ratios, but this one is pretty healthy, and only a long-term debt of $1.9 billion. If they were able to go through a pandemic and still see a rebound, is because they must be doing something great with their money, as travel was one of the most, if not the most affected industry last year. Now, something good that happened because of the pandemic is long-term stay growth. Long-term stays remain their fastest growing category by trip length, and even better, as 81% of long-term stay guests in Q2 saying they plan to book another long-term stay in the coming year. Overall, nearly 50% of gross nights booked were from stays of at least 7 nights in Q2 2021. Meanwhile, short-term stays surged in Q2 with total gross nights booked increasing almost 40% compared to the prior quarter. As I believe many people started and stayed working from home and now are able to work while traveling around different cities, which obviously benefits Airbnb, as I think it is more comfortable than a hotel to work, in my opinion. Many might not agree, but I prefer to have my own kitchen, living room when staying over a week in a place instead of just a hotel room. I do have to say that Airbnb is anticipating that the impact of the virus and the introduction and spread of new variants, including the Delta variant, will continue to affect overall travel behaviors, and is already raising the number of cancellations and pause on booking numbers as well, which obviously is not good for the company, but is still rebounding from last year numbers. Now, I do have to say that Airbnb has a huge and strong brand, and consumers became more aware of alternative accommodations during the pandemic, which is why Airbnb has recovered faster than the rest. Hilton has been on a downturn since 2016. Marriott was doing great, but have not gotten to pre-pandemic levels and are nowhere near that yet. Even a very popular hotel or resort stock in the YouTube space, Wynn Resorts, is still recovering, and obviously that is something very, very attractive for investors of Airbnb, which might be why the stock is trading at such high valuation, because it is currently trading at $153 per share with a huge market cap of $96 billion and a very, very high price to sales ratio of 21. I understand that high growth companies tend to have a higher price to sales ratio, but they tend to be a single digit or at least in the low 10s, but over 20 is huge. Still, their competitors are trading way lower as well. Expedia with a price to sales ratio of 3.57 and TripAdvisor is at 7.81. I do understand that TripAdvisor and Expedia are not at pre-pandemic levels yet, as Airbnb is, which is why it makes it even more attractive, showing that they have a brand awareness and strong brand and high quality business. Now, I understand Airbnb is a very trendy company. I think all of us have stayed at an Airbnb or at least have checked their page for prices in comparison to hotels and many other websites. The stock is crashing and people are getting attracted while it continues the downturn. The company has demonstrated to be a strong company, being able to beat competitors and rebound faster than hotels and competitors. I don't see this company disappearing anytime soon, as I believe they will get bigger and bigger over time, and hotels cannot compete with them because of the prices that they offer. Now, on the downside, we have to accept that the valuation is really high, that there is no barrier to enter the industry, and competitors could start gaining market share with time. But still, I think that if and only if Airbnb continues expanding, growing, and most importantly, innovating and offering better things, experiences, and prices than their competitors, then they will be able to stay as the leaders in the industry for a very long time. Now, am I investing in this company? No, I do not own any single share of Airbnb, even though it is the first stock I have on my watch list, because I'm not gonna lie, I love their business and everything that they have done, but right now it is trading too high for me, and I already have many speculative stocks in my portfolio right now. I'm investing in about 5 to 6 spec stocks that are not profitable, and I know I gotta be careful and slow down a little bit because that's a huge risk, but it is definitely a stock I want to continue watching if it continues dropping, because if it drops to certain levels that it is a complete steal, then I would start a position. But right now, I don't think I feel comfortable adding another spec stock to my portfolio unless it drops more or I sell any of my other spec stocks for any reason in the coming weeks or months. I would obviously let you guys know if I ever sell any of my stocks and if I ever start a position in Airbnb, as I know that many of you like to know what I do with my money. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Remember about the complete free Discord group chat, which the link for that is down in the description below. Thank you and see you next time.